Browne. Welcome to this, our latest in our series of Meet the Lender. And this week I was delighted to be joined by Siobhan McMeneman, who's a Business Development Manager for the Leeds Building Society. Now, the Leeds are a high street lender who are really working very, very hard to support landlords in many ways. I'm sure Siobhan will go into this in a bit more detail. But what you essentially get with the Leeds is high street lender pricing, i.e. the kind of lower cost pricing, but lending it on, for example, holiday lets, HMOs, limited companies. Now they do this not aggressively, so they're not going to take on really large HMOs, complex limited company structures, that kind of thing. But actually, they're still able to serve a large percentage of the clients that come across, certainly our path at least. So really, really interested to see what Siobhan has to say in terms of Leeds offering. Siobhan, thank you so much for joining me today. Lovely to speak to you from rainy Northern Ireland, as I understand it. So first of all, we're going to kick this off by asking you, who is a typical borrower for the Leeds Building Society in the context of buy-to-let specifically?
Yeah, thank you, Jenny. Yeah, so buy-to-lets with us, sort of the USPs with us around the buy-to-let market for Leeds, we have no minimum income requirement and no max age requirements. And off the back of that, that tends to be then that we tend to get quite an older borrower for buy-to-lets with us because there is no maximums at the end. Typically, borrowers who are coming to the end of their existing deal with their current lender may be struggling with an age restriction there. We get those. We do get younger applicants as well, obviously. 40-year term on interest only is pretty much the standard for buy-to-lets with us. And then the no minimum income space, that kind of works well for us. There does need to be an income and it needs to be sustainable and provable. Should there be a rental void, how can they support the mortgage? But there is no set minimums or maximums like some other lenders might have. Residential homeowners, we do require for buy-to-lets them to be residential homeowners. We do have some slight differences on policy with that. If they live with a spouse that is an owner-occupier, we can look at those, and we can also look at people that are living in tied accommodation. So although you can't be renting and doing a buy-to-let purchase or remortgage for Leeds, if you're living with a spouse and they are a residential homeowner, we can do that. We can also do remortgages onto a buy-to-let of somebody's current residential if they're moving in with the spouse who is an owner-occupier as well. So a big mix there. I suppose the main ones that are a no are first-time buyer landlords, as in first-time buyers with no mortgage previously. But yeah, a really good mix on it. They have to be over age 21 to get a mortgage with us. But again, no maximums at the end of the term, Jenny.
Brilliant. So just coming back to the ages. So literally, you would allow a 80-year-old to come to you for a mortgage and they could have a 25-year term, is that right?
40-year term if they want to. We don't have a restriction at the end. So yeah, absolutely. And a lot of other lenders do tend to have restrictions there. So you might find you have a case where it's a son and a dad has a buy-to-let together, coming to the end of their term with their existing mortgage or just looking to remortgage for a better deal. And I suppose the panel for them is restricted from that perspective, but we can look at those all day long. Because we don't apply lending into retirement rules within the buy-to-let industry with ourselves, it makes it a lot easier. Again, they have to have a sustainable income should there be a rental void to support the mortgage. But yeah, so no age restrictions on our buy-to-let proposition, which has always been quite good.
It is, because actually I think some of the other big lenders, they will say they don't have a maximum age, but there is a maximum age when you apply it, even if they would then let the mortgage run on for 25 years. So the fact there is just no maximum age at all for you guys is really fantastic.
Yeah, it works quite well for us. And, generally people in the older sector have good experience in buy-to-lets, and, they might have a portfolio of buy-to-lets that they're looking to just remortgage to change rates. Lower loan to value stuff is really, really good with us. We have the ability on our MSO system for desktop valuations and auto income verification. So what that means is a broker is doing a case for a client, they submit the information, and for particular cases that set within that realm, immediate offers or offers, you know, within a couple of hours. And, you know, from a speed of processing and a speed of administration from you guys, that makes it a really fluid process as such, you know.
Sounds wonderful. Okay, cool. So in terms of, so we kind of understand which kind of borrowers you guys are attracting, which is fantastic. And you've talked about loads of the great things that you guys offer in terms of criteria. I mean, if I had to really kind of pin you down and say, what would you say the 3 USPs, key USPs for the Leeds? I'm guessing ages is definitely one. No minimum income is another. Is there anything else you think is really kind of setting you apart from some of your competitors?
Well, I guess the speed from app to offer on buy-to-lets for those cases that, you know, fit within those sort of guidelines makes it a really attractive proposition. Rates for the particularly the lower loan to value set of mortgages are always really good. Obviously the age thing again that we've spoke about before. Our offers are valid for 6 months and you can get them extended for a further 6 months.
Wow, okay, that's good.
Yeah, so new valuation required, can take existing rate that they have now. So where you can sort of place that is, for example, you know, you might have clients and normally brokers look at remortgaging them, you know, within that 6-month window. But if rates were really competitive, you could look at doing a mortgage on a decision in principle and a full application, even if they've got, you know, 10 months left to run on their existing deal, if the rate was really, really competitive, because you can have it offered, have an offer extension at the end of the 6 months, and then be ready to remortgage them, you know, 4 months into the second sort of window of the offer extension. Actually, when rates were going up, excuse me, you know, a year and a half ago, and they were kind of all lenders were shooting rates up. I had a few brokers in the buy-to-let market that would have, you know, seized the opportunity with that and did a lot of remortgage stuff, even knowing that it wasn't going to complete within the first 6 months. So, you know, I appreciate it's not a big sort of volume of business that comes that way. But yeah, so the 12 months offers is always really, really good as well. We have a background stress test on our what they have to have in the background. That's 145 at 5.75. And that's literally all we sort of need for background buy-to-let. So it's quite a simple process. 1 month's pay slip, 1 month's bank statement, proof of rental, and that's it with us. So, you know, generally speaking, the buy-to-let business with us goes through quite smoothly.
Right. One of the things that I thought you might mention that you haven't is your offering for HMOs, because you guys have a really nice offering for, in terms of pricing, I suppose this is where my head's going. So you actually are a sort of clearing bank, high street style lender with the pricing that comes with that, and yet you can lend on limited companies and also HMOs. I'd be interested just for you to touch on those for a moment and some broad criteria, because I think that's really interesting that you guys can do that.
So we do have quite a few niches within the investment mortgages, HMOs being one of them, holiday let mortgages being another, and obviously now our limited company proposition, which is fantastic. Holiday lets first. On those main sort of USPs around the holiday let sector are we can do Airbnb, so applicants can be buying a property to rent out and are using Airbnb for that rental. We ask you, the broker, to get the low, medium and high rental achieved from a local holiday let agent, and we take that amount of income that you can get and we assess the borrowing based on it. Now, other USPs within that are we allow the applicants to use it themselves when it's not being rented out. So it is a holiday let, but your applicant can use it off peak or within, you know, certain time scales. We do have a minimum income for holiday let, so it's 40k for one applicant or 60k for a joint application, and it's not related to properties. But generally speaking, Jenny, within the holiday let sort of purchase and remortgage, that's usually sort of the demographic of the clients, to be fair. HMOs with ourselves, yeah, absolutely. We have a small HMO proposition and a large HMO proposition that allows up to 8 bedrooms on the large. USPs around that are fees. So our fees are set at, you know, either a 0 fee, a mid fee or a high fee. And the rates are competitive as well, as opposed to sort of specialist lenders within that sort of market. Normal house on a normal street either need a HMO license, to rent it out, or if the local council doesn't require the HMO license, just proof of that. So it really just needs to be something with us, because we are sort of a building society and we're quite cautious by our nature. It's a normal house on a normal street that could be sold to anybody, so it's not in a specific area that's only for HMOs as such, so it gives a wider scope for us. And then lastly, the limited company proposition with ourselves. It's a separate platform that you need to submit the application on, but it's quite similar, so it's quite easy and straightforward to use. Again, around the limited company space, we're comparable to many lenders. However, again, the fees are probably where we are key there. So we've got a no fee option, mid fee option, and a slightly higher fee, but they're not as high as some of the competitors that we would have. 80% LTV on limited company, which is really fantastic. Rates, as with all lenders, go up and down based on sort of market trends. And the processing is really, really quick for them. We need them to be residential homeowners. We need them to have an income not related to properties, again, to support the mortgage should there be rental voids, for example. But the limited company is going really, really well with ourselves, Jenny.
Brilliant. When we talk about fees for the HMOs and limited companies, and you say no fee, mid fee and larger fee, some people, when we talk about large fees, I mean, there's some lenders that are charging arrangement fees of 7%, 9%. You're not talking that, are you? Talking 999 or 1499? It's those kinds of fees as your medium and high, yeah?
Yeah, absolutely. I'm just going to have a quick look whilst I'm chatting to you today. 999 is the maximum on our small HMO or a zero fee option. And then on the large HMO, it's exactly the same as well. So free valuation if it's a purchase or a remortgage. The lower rate will come with the 999 completion fee. And again, it's fully refundable should it not complete for whatever reason, you know.
Brilliant. Okay, that's lovely. Thank you. So it sounds like as a lender, Leeds are trying to support lots and lots of different investors and different structures of investment, i.e. limited companies, personal, and you're also looking to try and support landlords with different investment types as well, so HMOs, that kind of stuff. Where do you say no?
So it probably touched about it a little bit at the start, but you know, first time buyers is a no for us in the buy-to-let sector. Somebody who's self-employed that has decreasing net profit. Now that can be kind of hard to explain to a client at times, because you know, somebody could have made 500,000 and is now making 400,000, and that's still an amazing income to bring home as a self-employed sole trader. However, as a lender, we would see that as a decreasing net profit, and we don't like that. There's a 10% threshold that we have there. So that's generally declining income for self-employed applicants. Anybody that hasn't been in their job more than 6 months, that's an automatic sort of decline at application stage with us. They can have continuous employment for 6 months of no gaps of more than about 3 weeks. Around the adverse space for us, we're quite, again, a building society, so quite cautious by our nature. So anybody that has historic adverse that doesn't fit the guidelines of our adverse policy, that is, one missed payment on a mortgage within the last 12 months, up to a 2 on a loan or a credit card. So those things are within our adverse lending policy. However, you'll know yourself what that does is impact their score. So, a 999 score on Experian is the ultimate that we would want in terms of application. People do get past that with less, but scoring can be quite tight because, again, the demographic of what we want in terms of business, it needs to be really clean mortgage applications with us. But yeah, so defaults within the last 3 years, maximum 500 quid needs to be satisfied. Anything over than the 3 years, that is fine, but again, it needs to be satisfied. So in a short answer to that question, if you would get a score decline, but what I would always say from that perspective is, if you're trying 75% LTV for that customer and you get lending has been declined based on internal score, try a lower loan to value, because the parameters of those are different. So, we might not be able to offer 75%, but we might be able to offer 70 or indeed 60. So, usually somebody will ring me and say, I've done this case and it fits the policy, but it's failed. So I'll always give sort of an indication from that perspective to see if we can make it sort of fit the parameters.
Brilliant, thank you. Okay, so moving on now to, I guess, a bit of advice for anyone who's thinking about applying for a mortgage. And we could say with the Leeds, but actually it's going to be the same whichever lender they're going to. What piece of advice would you give to someone to help ensure that they have a nice, quick and smooth application experience?
Yeah, so I mean, brokers that use us regular understand what we look for in terms of documentation to support the mortgage application. A smooth process always looks like at the point of full submission, those documents are uploaded, they all get underwritten together. Everything is as it should be in terms of pay slips, bank statements, and valuation is instructed and it's offered within 2 or 3 working days. Our timescales for app to offer is really, really good now with this MSO system that we have. And just following any prompts from an underwriter in answering questions. What I would tend to say to a broker is if you've got something that's an anomaly on what you're sending in, just put an extra note in there and explain it. So the person, the human that is underwriting that case looks at that information and goes, okay, yeah, that makes sense. I'm going to offer this now, as opposed to them having to come back and ask for additional information. You've always got a business development manager like myself. If something gets stuck and you need some sort of personal intervention on a case, or you need to explain to an underwriter something about that case that gives them a bigger picture, and that works quite well with us as well. We've got the broker chat facility there as well. The guys on our service desk that would answer questions in terms of how do I sort of fix this to-do point, or I've been asked this question, can you explain it more? There's a lot of support within our head office departments to be able to do that, and their aim obviously is to get the cases offered as quick as possible to get you sort of done and dusted. But yeah, so full submission of documentation that's required. If anything is an anomaly, please let us know at the start so that we're able to have a bigger picture for it.
Brilliant, thank you. Okay, so let's now come away from kind of what you guys are doing and think a little bit into the future. And we obviously have the Renters' Rights Bill, which is about to get, when we're having this conversation, it's literally about to get royal assent and be passed into law. And I suppose one of the questions that people are probably thinking about is the Renters' Rights Bill going to impact the way that lenders underwrite buy-to-let mortgages? Is that something that Leeds are considering at the moment? Have you got any thoughts?
Yeah, so we haven't got anything published per se on this as yet. My sort of thoughts are at the minute, from an EPC perspective, so an energy proficiency, at the minute, we would only allow for the buy-to-let market to be an E, so the minimum it can be is an E. So obviously that will have an impact going forward, because that, landlords will have to put work into the property to get them certificate to be higher as such. So obviously at valuation for remortgages at the minute it's E, but moving on down the road that's going to be C. So there could be a lot of applications that are submitted and will either have to wait, or the landlords would have to go and do work on that property to get it up to a suitable standard. Other things around that space for us is our tenancy agreements at the moment is fixed term tenancy of no less than 6 months or no more than 36 months. That's going to change. They're abolishing fixed term tenancies. So, potentially we will have to look at changes around that. For the likes of purchases, if we've got tenants within that property and the new landlord is purchasing it, around the sort of standards and regulations around that will obviously have an impact as well on, I guess, more, I suppose, purchases than the remortgages. We do require proof that the property has been rented previously for the likes of remortgages. So, the difficulties around the fixed term tenancies and Section 21 notices, that definitely will have an impact on the market for sure.
Okay, interesting times coming up. And then
Yeah,
finally,
absolutely.
In terms of the future of the private rental sector, how do you, the Leeds, what's your kind of view on it? Good place to be? Is it going to continue? What's going to happen, do you think?
Yeah, so I mean, if we're looking back to, what we did 5 years ago as to what we did now, it's certainly a different marketplace. The rate changes, stress rates on how we assess buy-to-lets have definitely made a difference. It does remain an important element of our lending mix. And I suppose with Leeds, our ability is and our wish is to make home ownership within reach of more people generation after generation. That's kind of where we see ourselves. So I suppose maybe you would look at it and say, well, you want to help first time buyers, but you want to also remain active in the buy to let market. And we do that with, having some fantastic first time buyer propositions out there as well. So it's a good mix of the both of them. We do expect a modest increase in demand in 25-26 for buy-to-lets if you were to compare it to 2024. I suppose the landlords that have remained in the market are more confident. So I guess further advances, which we do know as well for the existing customers, remortgage capital raising with ourselves is a key area that we're in. Just on that, in terms of capital raising, we have quite a slick proposition for capital raising to do work on the properties. Very little information required as to what they're sort of doing with that money, as long as it's within the home improvements of those properties and or their portfolio. We're quite relaxed around what we need for that. Looking at some figures, buy-to-let lending made up 9% of new lending for us in 2024. So, it's definitely a big chunk of our business, and 21% of our mortgage portfolio is where we're sort of sitting at now. Our limited company buy-to-let market is new for us, and as that market matures, remortgages will take a larger share of that for us as well. So it just gives customers the choice of going down the buy-to-let standard historic route for buy-to-lets or going into the limited company space with the tax advantages of that. Somebody, not me, has done some sort of research on this, and 60 to 70% of the buy-to-let purchase market is now limited company. So we expect it to remain the same for going forward. So that's going to be a big change, and all lenders are sort of following suit from that. Just having a wee look there, the dominance of limited company in the purchase market will gradually feed through to a larger market for limited company remortgages, which is what I've said as well. So we're sort of really seeing that now. We've got rate switches for limited company buy-to-let lending as well. And again, for the normal stuff, our rate switches online. It's a really smooth, seamless process. You can do a rate switch for your buy-to-let customer up to 120 days before the rate is due to expire, up until 8 working days before the new rate is to take effect. They can make lump sum payments over and above the 10%, which is always quite flexible as well. And if rates go down, once you've secured that rate, you can go in and cancel it off and pick a new one as well. So lots of flexibility around rate switches. Additional borrowing with ourselves is now online and for the broker market to do as well. So overall, it's really good proposition for buy-to-lets with Leeds.
Brilliant. Siobhan, thank you so much for coming and having a chat with me today. Much appreciated.
No problem.
Thank you. And there you go. That was Leeds Building Society. Thank you again to Siobhan for her time. And as always, if you have any questions about any of the things we've talked about today, please don't hesitate to get in touch. 0345 345 6788. We will see you next time around on our next episode of Meet the Lender. Until then, look after yourselves.